Okay, hi everyone. So this is an update on another portfolio stock that I hold, MPS. So recently, MPS announced that they have done yet another acquisition, completed yet another acquisition of a company named EI Design Private Limited. Um, Again, this is in the e-learning space. The acquisition amount is about 40 crores. It's an all-cash deal, and it's a debt-free company. The company EI Design, the revenue seems quite healthy, and the margins as well as quite healthy. The acquisition for 40 crores for a company which does a PAT of around 7 crores is very attractive. So I think they have done an excellent deal, which should add to their top line and the bottom line, as well as a good integration into their existing e-learning business that they acquired a while back. So because of this, the stock has actually reacted quite well uh, since the Q4 results came out, which was also quite good. The stock has rallied from about 500 to around 700, close above 700 today, and it's given a nice breakout. And the breakout, if you look at this sloping trend line, the breakout happened today, and it should hopefully continue to rally from here and move towards all-time high. Looking at the longer term charts, the all-time high sits in around 1100, which was in the year of 2015, so quite a long time back. And that was the time when they had very high margin, very high return ratio. So let's look at what MPS has been doing over the last several years. So looking at what MPS has done since 2010, uh, you can see that the business uh, was doing well right from 2013 up to 2016, and then slowly the revenue started to started to be flat, and their margins started to contract a bit, and this lack of consistent revenue growth meant that the stock couldn't continue to climb up, and it peaked out at at 1100. So it's the sales growth has been very sluggish over longish period of time, and even recently is quite nothing to write home about. The profit growth has been okayish in the 10-year period, but very bad for the 5 and 3-year period. The stock has done relatively well in the 10-year period. If someone's holding it for 10 years, it's a healthy return. But I'm sure there are a lot of frustrated long-term investors in MPS. It's been, you know, it's been favorite stock for a number of these value picker folks, and I guess a number of them by now would have exited. Uh, so there is nothing much to talk about on what's happened in the last couple of years or a bit more in MPS. But what is noticeable is that they are picking up their traditional content business is picking up. The e-learning business is also completely turned around now. Um, so things are looking very bright. The management was much more bullish in this con call, and they see uh, revenue growth of 20% plus and with margin expansion. So with this acquisition and this kind of outlook, I think there is a decent chance that the stock might re-rate. Um, the other good thing about MPS is it has a very good dividend yield. So they recently declared a 30 rupee dividend on a stock price of around, at that time it was close to 600. So that's 5% yield. It generates a ton of cash from its business. It doesn't really need a lot of working capital. So it's this kind of IT services type of business where generating ton of cash, and either buying back shares or uh, giving doling out dividends or uh, yeah. So that's the whole story about MPS, and this current price action is looks promising, but it has have to take out in the near term, has to take out a number of resistances. There's one at 730, yeah, and then towards 800 it would have a few resistances that it needs to take out. But there is a lot of good news in the stock, uh, and this recent acquisition is also a big shot in the arm for the company, and I think this is going to be a very good bet for the next year or 2 years. Okay, that's about MPS. Thanks for listening in.